Hello, and welcome to this webinar on the 2018 Australia's International Business Survey, or AIBS as we refer to it. The AIBS is a collaboration between the Export Council of Australia, the Australian Trade and Investment Commission, or Austrade, and Efic, the Export Finance and Insurance Corporation. On the webinar, we have three speakers from these organisations. We have Mark Thirlwell, Austrade's Chief Economist. Hi, Mark.
Hi, Heath.
Representing Efic, we have their Chief Economist, Cassandra Winson-Reid. Hi, Cassandra.
Pleasure to be here.
And I'm from the Export Council of Australia. My name's Heath Baker, and I'm the Head of Policy. I'm going to give you a really quick history of the AIBS and tell you why we think it's important. Mark will give you an overview of the respondents and their most important markets, and Cassandra will give you some detail on the finance. How and where businesses access finance, or perhaps more importantly, why they were unsuccessful in applying for finance. For each section, we'll all have a chat about what we think the most important statistics are and have a go at maybe trying to explain some of it. So the history and context. The Export Council, Austrade and Efic started the AIBS in 2014, and this year is the fifth survey. We decided to launch the survey because there was very little granular information about Australian businesses involved in international trade. The Australian Bureau of Statistics gives the international trade statistics, the value of our exports by destination and by sector, as well as a publication called The Characteristics of Australian Exporters, which gives the number of exporters by destination, the value of their exports, and their sectors. But our three organisations were pretty keen to understand our constituents, SME exporters, a lot better. We wanted to know how big they were, how long they were exporting, where they were targeting, and the challenges they faced. So the AIBS was born and has become the biggest survey of Australian exporters outside the Bureau of Statistics. Over the last 5 years, we've had around 5,000 Australian businesses respond to the survey. The data have really increased the understanding of Australian businesses involved in international trade. There have been countless times where I've been in a briefing with the Department of Foreign Affairs and Trade or the Department of Industry, and the reason they've cited for one particular policy or another is the AIBS data. Mark or Cassandra, did either of you want to add anything to that?
Likewise, I think it's a really useful tool. As you mentioned, we've got a lot of quantitative data, but actually it's sort of the bare bones, so it's numbers and markets and flows. But when you want to drill down and understand the firms that are actually driving those flows, having a resource like AIBS is invaluable.
Cassandra?
Yeah, look, I think really similar sentiments. We're really encouraged by the findings of the survey. It finally puts hard data around the very active and particularly optimistic exporter segment that we're dealing with on a daily basis. And it's not to say that export is easy, but there are fairly compelling reasons to export at present. Exports are expected to fuel the Australian economy, and so I think AIBS is critical to track the progress of the export community, but also to make sure that we're servicing this really important segment to the best of our ability.
Absolutely right. And I think Mark's going to give us some statistics backing up the importance to the economy in a little while. So, Mark, I'll pass over to you to talk us through these businesses and where they're going internationally.
Great, thanks, Heath. So, as we've said, AIBS was designed to help fill in some of the gaps in our knowledge about exporters. But in order to get the most out of the survey results, we first need to understand the participants and how they compare to the underlying population of internationally active businesses in the Australian economy. In the case of AIBS 2018, we have 714 firms, of which 629 are internationally active, drawn from 9 industry sectors and operating across 92 international markets. In particular, we know that our set of AIBS respondents are typically relatively experienced firms in terms of their participation in international business, and also that they tend to be concentrated in the SME sector. It's worth keeping both of those characteristics in mind when looking at the other results. I should also point out that we've got a good split between exporters of goods and exporters of services. Defined by sector, about 55% of our respondents come from goods sectors and 45% from services. Although we also know that in reality things are rather more complicated than that. For example, firms from a goods sector like manufacturing may well be selling services into their markets. In fact, manufacturing is the largest source of our sample, accounting for about 24% of the firms that took part in AIBS 2018. It's followed by professional services, 14%, agriculture, forestry and fishing, 12%, and education and training services, 9%. I also mentioned that our sample was skewed towards experienced firms. Almost half, roughly 46% of our sample, have been in international revenues for more than a decade, and more than a fifth, 21%, have been doing so for more than 2 decades. They're also experienced across markets. 82% of our respondents operate in more than one international market, 21% in more than 11, and 9% in more than 20 markets. That SME focus of AIBS 2018 can be seen in that almost 3/4 of our respondents have less than 50 employees, and 60% less than 20. Likewise, in terms of total revenue, about 30% have revenues of less than $1 million, and another 44% have revenues between $1 million and $20 million. Finally, we should note that the vast majority of respondents in this year's survey, again almost 3/4, were involved in business-to-business export transactions, with only around 1/4 of them involved in business-to-consumer sales. We also looked at the country destinations for our firms, asking them which were the top 2 markets from which they sourced their international revenues. This year, the United States was the leading destination for 25% of our respondents, followed by China, 19%, and New Zealand, 14%. We were also interested in the start of our firm's export journey, so we asked them about their first international market. This was a more diverse group than the current set of leading markets, although the countries are actually pretty familiar. The United States was the most popular starting market, cited as such by 14% of our respondents, followed by New Zealand, 12%, and then jointly by the UK and China, with 8% each. As to why those particular markets were chosen as the first step in going offshore, the most important reason cited in all cases was demand for the product sold and the fit for the market. But other important factors include language, with a particular focus on English-speaking destinations, transparent business practices, and in several cases, the presence of FTAs. For the first time this year, participants were asked in detail about doing business in Latin America. About 30% of our respondents reported that they were currently doing business in the region, with Brazil, the most popular destination, taking about 57% of our respondents who replied positively, followed by Chile, Argentina, and Mexico. The main factor cited by these respondents as the key opportunity offered by the region was access to a growing consumer market, while the main barriers they faced included language and market access issues. It's noteworthy that those same 2 barriers were also cited as the top 2 reasons for not doing business in the region by our other respondents, with market access issues beating out language barriers, although note this does exclude the large share who answered none of the above to the list of options provided. AIBS 2018 also asked specifically about the role of new technology in international business, with a focus on the use of mobile and digital technologies and the use of online channels. Interestingly, the survey found that only a minority, some 44% of respondents, were using online channels to sell their goods and services, although of that 44%, 32%, so almost a third, said they relied on those channels to a great extent for export sales. Sticking with that group of users, the most popular sales channels were the firm's own website, 43%, or Facebook, 14%. It's probably worth noting here that, as I mentioned earlier, the majority of our respondents were involved in business-to-business sales, so consumer or retail platforms in many cases were not going to be relevant for them. Looking ahead, 34% of AIBS 2018 respondents said they plan to increase the use of both digital and mobile technologies and online channels in driving their business, and another 27% combined, said they would increase the use of one or the other. That said, 28% said they had no such plans at all. One particularly interesting aspect of our surveys is the forward-looking component. Our respondents tend to be optimists, and AIBS 2018 was no exception, with 66% of respondents telling us that they felt the overall financial outlook for their international operations over the next 2 years was better than the previous 2 years. In contrast, only 5% thought it would be worse. While pessimists have typically accounted for a small share in all of our surveys, it's also notable that the share of optimists has been increasing over time, climbing from 47% in AIBS 2016 to 59% last year to 66% this year. That optimism is also translated into firms' employment plans. 65% of our respondents said the outlook had influenced their hiring plans, of which 72% said they plan to increase their headcount, and to do so by an average of 41%. In terms of new markets, only 10% of respondents said they did not plan to do business in any new countries over the next 2 years, while 24% said 4 to 5 new markets, 12% said 6 to 10, and 9% said more than 10 new markets would be targeted. The most popular target market for our respondents was the United States, selected by 20% of participants, followed by China, 19%, the UK, 18%, and Indonesia, 15%. India and Vietnam were tied in 5th place, selected by 14% of respondents. Finally, the The survey also canvassed the views of a sample of firms not currently undertaking international business activities. For those firms considering exporting in the future, we asked what kind of support they would find most valuable in exploring potential international activities. The most popular response was introductions to overseas buyers, distributors, or partners, which was selected by 57% of our respondents. This was followed by insights into trends and emerging opportunities, 38%, and access to grants, also 38%. A better understanding of FTAs, free trade agreements, and regulatory requirements was the fourth most popular request. When these firms were asked why they weren't currently undertaking any international business activities, the most common reason cited by respondents was that they were concentrating on scaling up domestically, 36%, followed by a lack of international leads or contacts, 32%, with that second option dovetailing nicely with the earlier request for introductions. Hopefully that's provided a taste of some of what this survey has to offer, although there's a lot more to explore, as we'll hear now. I'll also add a plug here for our Austrade website, where my colleagues will be producing a series of blogs and data visualizations to help anyone who's interested dig deeper into the details, and where you can also access a copy of the full report. And of course, you can also find more information at the websites of our excellent survey partners, the ECA and Efic.
So in terms of the first international markets, we see that these 5 markets, the US, New Zealand, UK, China and Singapore, account for 51% of our sample's first market. Now, looking at our sample being very experienced exporters who for whom exporting is a large chunk of their business, I guess how important is it to get the right start in export, and what is the feature of these markets that makes them conducive to providing that right start?
So I guess a two-part answer. On the first part, we know from the statistics on exporter survival that a large number of initial exporters won't last beyond the first year. So that tells you that actually starting up is pretty tough. So getting your first market right is really important. It's not the only factor, but it's an important factor. So we shouldn't underestimate the importance there. I think the second point to note when we look at this mix is the preponderance of English language speaking markets. So the US, New Zealand, the UK, and Singapore. And while the single most important factor cited for across the whole set of markets was demand for the product or fit for market, English speaking was in second place. And I guess linked to that was a common language score, which was also pretty high, noticeably in the case of China, for example.
You'd have to think that knowing there is a demand for your product or a fit for your market is helped greatly by the fact that you can go on these websites and look at them in your same language and see what people are buying.
Exactly, yeah. So your information and intelligence gathering activities are going to be much easier in those sort of circumstances.
And Cassandra, we've seen in previous surveys that 4 out of 5 of these markets rank fairly high in terms of ease of doing business, or at least when compared to Australia. The 5th one, China, is quite a difficult one. In terms of the risk reports that you guys put out, would that rank about right?
Yeah, look, absolutely. So ease of doing business looks at how difficult it is to do business in a particular country if you're a domestic SME. So, but obviously there is overlap. So, for instance, in Republic of China, it's ranked 5th for enforcing contracts. So it actually outranks the US in terms of the time and cost to enforce a contract, but it's 97th in terms of trading across borders. So it's costing far more and taking far longer than a typical OECD country to get your wares in and out of China, and certainly relative to the first 3, it's a far more difficult place to do business. I guess on the macroeconomic side, it's a pretty compelling growth story. China's expected to slow to 6.6% this year, but still real GDP output remains really strong. And that's, of course, because the size of the economy is much bigger. But there have been continued concerns from the IMF and others about the level of China's debt and the potential for that to lead to instability in other sectors of the economy.
So when it comes to the LATAM question, I think one of the important points is that when we approached different partners to promote the survey, we did specifically go to the LATAM business chambers and several organisations with a focus on Latin America. So this is probably not quite representative of the sample, and I don't think we sort of want to pretend that any of the survey is a representative sample, but it's a useful snapshot. So that's an important thing to keep in mind when it comes to looking at the statistics. So in terms of future markets, we see the US is number one, China is number two, and the UK is number three. We have the US and China on the verge, or perhaps, depending on what your perspective is, engaged in a trade war, and we have the UK exiting from the European Union, and at this point the trading relationship is quite unknown. Yet these are still the three biggest target market for Australian exporters. What are people not concerned about these risks? Are the sort of commentary overstating them? What's going on here?
I think there are a few things you could take from it. I guess one thing to bear in mind is timing. So we did this survey in the second quarter of this year. So while bilateral tensions between the US and China were already high then, that took place before some of the rounds of tariff increases that we've seen. So partly there could be a timing factor at work. Partly, as I mentioned, I think in some of my comments, our survey respondents tend to be optimists. It's been striking across year after year that we've run this survey that when we've talked to our exporters, they've actually been pretty upbeat about the prospects. The majority of them have always looked ahead and said, look, the next 2 years tend to look better than the previous 2 years, and very few have been pessimistic. I don't know if that partly reflects their experience and the fact that these guys have been earning revenues for 10, 20 years. They've seen an awful lot of shocks in the global economy. They've also had to manage periods of quite high volatility in the Australian dollar and big sustained swings. So partly what might be going on is the fact that they've survived all of this makes them feel comfortable they will continue to survive the challenges. And another factor, which you alluded to yourself, is I think there's a tendency to try and look through the newspaper headlines to sort of say, okay, there's this big stuff going on up here. Until we actually see that impacting our business, we're going to continue with our plans. So there's almost a discounting going on, and it's not unique to exporters. We've seen financial markets doing very similar sort of things. And then I guess maybe if you want to be cautious, maybe there's a bit of complacency there too.
Yeah, or on the flip side, perhaps people are seeing some opportunity in crisis or in turmoil, perhaps.
I mean, it certainly seems that the 1 and 2 future markets very much gel with the 1 and 2 established markets in the overall trade data. And it seems that, when exporters find success in a market, they've established partners and contracts and all of the relationships that need to go with it, that they are increasingly likely to find success and to be crowded into that market.
I think the point about risk creating opportunity is an interesting one. So if you think about tariff wars, that creates winners as well as losers. Yep. So you can have some trade diversion that can go on. It may be that we see access to some markets may improve in some cases, although the product mix there is interesting. It could be the case that you think that markets that were focused elsewhere will pay more attention to you. So that could be another part of the story. Brexit may be the story there. I know some people think that one impact of Brexit might be that the UK pays more attention to more distant markets rather than concentrating very closely on its neighbours. And certainly that's some of the rhetoric that we've heard. So that could be a factor as well. I think the other thing that we could bear in mind is that consistently, again, in the survey, it tends to be the same 2 top markets. Presumably, to some extent, at least some of these firms set their plans well in advance about expansion. And again, you sort of have that feeling that they're probably looking through some of the volatility and saying, okay, for a while now, we've seen the US and China as major markets. We'll continue to see that as a medium-term story rather than, even though there are these big bumps in the short term.
Yeah, and I think while there might be shocks to the trading system, these won't necessarily flow through so much to those domestic economies. So if you're looking to sell to those domestic economies as opposed to through those domestic economies into global value chains, there's not going to be a huge amount of impact.
Sure, and of course we've seen very strong growth, or relatively strong growth in the United States, for example. So just in terms of pure opportunity, presumably that's showing up in the survey results too.
So it's great to hear that we have such an optimistic bunch of exporters responding to our survey, but with all the optimism in the world, you can't actually turn that into revenue and profit unless you can finance your plans. So to talk us through how and where businesses are getting their finance or not, as the case may be, we have Cassandra. Thanks, Cassandra.
Thank you. Well, look, each year AIBS tries to gauge the ability of Australian exporters to access the finance that they really need in order to support their international operations. And of course, that's very close to our heart, being Australia's export credit agency. So firstly, in terms of sources of finance, we find that consistent with previous years, AIBS 2018 found that Aussie companies generally don't turn first to Australia's dedicated financial institutions in order to finance their export operations. Instead, 62% of respondents cited retained earnings as a very important or an essential source of finance. So funding from owners, family and friends ranked second at 45%. By contrast, loans from domestic and overseas banks were deemed important by far fewer respondents. So nonetheless, 42% of respondents did try to seek additional finance for international business opportunities in the last 3 years. And it's really interesting, I think, because it's a significant increase from prior years. And it's despite the fact that the perceived difficulty in accessing finance has virtually been unchanged compared to 12 months ago. Instead, it comes at a time where various sentiment indexes are suggesting fairly heightened levels of optimism. As Mark said, the AIBS 2018 respondents are a fairly optimistic bunch. 66% of them said their future outlook is better than it was in the last 2 years. But of the 42% of respondents that did seek additional finance, a full 40% of them failed in the attempt. So overall, we find that the two most common deal breakers related to inadequate security. By contrast, things like poor credit history or business inexperience were actually pretty minor factors. Now, from our perspective, and from a trade finance perspective, that's a fairly illuminating finding. It suggests that commercial deals are commonly passed over not because of inherent business weaknesses, but because the exporter can't post sufficient collateral. So we also asked exporters about their plans for the next 12 months, and about a third of respondents said that they plan to access additional funding. So similarly, respondents are most commonly expecting those funds to flow from investors, whether they're domestic or international, as well as, of course, retained earnings. So I guess that's sort of a call to arms from Efic's perspective. We supported about 22% more exporters last financial year. We certainly want to grow that number and make sure that these commercially viable exports don't continue to fall through the cracks.
Cassandra, I might just ask you, 40% of exporters being unsuccessful for their finance applications seems awfully high. Is that what you would expect, or is it are we seeing a change in the credit market?
I'm not sure that we're seeing a change in the credit market because that figure has been so stable over the 5 years that the AIBS has run. So, I mean, you need to put it into perspective when we're saying that 40% of respondents are trying to seek additional financing, and of those, 40% are unable to do so. So a small percentage of those, it will be because, you know, the market is rightfully scaling them out because they're not commercial and creditworthy, but it does seem to be a significant minority that aren't finding finance when they should be able to.
Absolutely, and as Mark said earlier, the respondents are a very experienced set, and you know, exporting is core to their business. So given all those factors and the sample that it represents, it does seem like there are a lot of good businesses who can't get the money they need to grow.
Sure. In previous years, we've asked that question and we've differentiated it by business size, and we find that this problem is very much concentrated in the S of SME, large businesses being far more able to source finance from domestic and international financial system. So as Australia's export profile rebalances and SMEs play a particularly increased role in that export profile changing, we would think that this will be an increasing problem and something Efic will need to help address.
Thank you very much for that, Mark and Cassandra. So as Mark said earlier, if you want to access the survey results, go to efic.gov.au/AIBS And if you have any questions or suggestions about the survey, it is an annual survey, and we will be starting to look at how we can update it for 2019. Please get in touch with us at info@export.org.au. Thank you.
Thanks, Heath.
Great, thank you.